Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Friday. It's July 28th. Wow, we're approaching towards the end of summer, counting down now. Hey, we got some important data to go over today. Of course, we got the GDP, or also known as the Gross Domestic Product, for the second quarter. So, first quarter was actually revised lower. We had a 1.4 final revision, and that final revision got even revised again. So, down, and it got lowered from 1.4 to 1.2%. Now, forecast for Q2 was 2.9. Funny thing is, Atlanta Fed basically was projected 2.5, so I think Atlanta was a little bit more intact in at 2.6. The initial reading came at 2.6, so we'll have another reading next month in August, and then it's supposed to be the final revision in September for Q2. Now, if you look at year-to-date for this, it basically brings us at 1.9%. GDP, which basically we've been hovering around the 2% mark for quite some time. So it'll be kind of important to see what the third quarter does, see if we can get another boost from that. So that will be to be seen, I guess. Employment cost index also for the second quarter. So we had a 0.8% Q1 increase. 0.6 was the projection for Q2, and it came in at a 0.5% increase. So that brings us basically over about a year, about 2.4%. So this is what's kind of keeping inflation in check. It's you're seeing a tight labor market, but not a whole lot on the wages going up, and that's really what's keeping inflation, the PC and all that, at a low standstill, and what's also keeping interest rates low. So this is what's kind of driving the Fed a bit crazy, that we're not seeing higher wages coming up. Consumer sentiment. The initial reading for July was at 93.1. Projection for the final revision was at 93.2, and it came in at 93.4. So a little bit higher for compared to what the initial was in July, but it's still down from June, which was like 95, I believe, 0.1. So June was a little bit higher, so we dipped a little bit in July here. Right now, stock market's mixed. The only thing that is up is the Dow. We had, again, some more earnings reports. Of course, the GDP was something I'm sure they looked at. Employment cost index, I'm sure they looked at. There are also, we looked at some earnings reports that were pretty moderate or modest. Some came in a little bit underwhelming, I guess. Amazon was a big one today to be mentioned. Another thing is that's on the investors' moods is our inept Congress. They can't seem to get anything done. We've had, remember they were kind of in the first half of the year, they were kind of this euphoria of Trump's with his pledges of infrastructure, tax cuts to healthcare and all these different things, and with these rounds of healthcare not going through Congress and not making it through Congress and stung, is basically leaving little hope for the other items to be actually moving through. So they're starting to get a little bit sour on this euphoria is starting to be kind of being. Basically, it's going to be a wet blanket on the euphoria. So basically, they're starting to get sour on Congress and getting anything done, even at least this year. So that's kind of turning the sour mood here. Bond market, we're actually rising up. We're up about 13 basis so far from where we left off yesterday. We are above the 200-day moving average. The 10-day moving average is here. But here's the 50-day moving average. This seems to be the one that's kind of keeping it a little tight here. It's the second line of resistance. As you can see here, we did touch a couple days here and pull back. It seems this could keep us in check here for a little bit here. Hopefully we can break above it and have a little bit more of a boost. But at the moment, it looks like it's kind of keeping us in check from not getting too far ahead of ourselves here. But rates are better today compared to where we were yesterday, so that's kind of a good sign. We're seeing a fewer wicks here, so we're starting to get some more certainty in the markets. So when you get these long wicks, the market's like, well, I don't know where I'm going to go. We had a sell off here, but kind of pulled back. Same thing here. It was going to, people were buying, selling. They didn't know where they wanted to go. So today seems to be a little bit more decisive as to where the bond market's moving. So that's kind of a good sign for us. And as you can see this week, we've been more or less in a, even though it's been kind of a wide range here, we've been more of a sideways pattern here. All right, but today we got improvement in our interest rates today. And next week we got some important news. The big ones will be on Friday. with the jobs numbers coming out. Tuesday, I won't be able to do this recording, just to give you kind of heads up. I won't be able to do recording. I'm traveling, taking a little vacation, but I will be doing these throughout my vacation for about 2 weeks. So I will, just Tuesday happens to be an early travel day. I won't be able to get to this. All right, folks. So anyways, if you guys want to get more data, just come over to Twitter. Follow me at Mike Bjork, and you'll catch up on the latest even after these recordings. I hope you guys have a great weekend. Thanks so much for watching. We'll look forward to see you guys on Monday. Take care. Bye-bye.